Hello, welcome back to Income Trading 101. Hey, today we're going to take a look at NIO Inc. This is a Chinese electric vehicle electric car maker. And they've obviously, if you take a look at this chart, they've obviously had a pretty strong run at the end of 2020. And we just want to take a look at how they're going to do in 2021. So let's just expand this on out. And of course, I'm using TradingView. Each of these little E circles down here let you know that they had an earnings day then. And just right off the bat, I'm not the biggest user of volume, but all of these little lines down at the bottom below the price graph indicate volume. And you can just see how volume really has increased significantly in this stock. It's been dropping off in the last few weeks. But something tells me that's not gonna last. So here, let's go ahead and get rid of that data on our chart. And we're gonna come over here. I like to start first with full day data. We're just gonna take a look at moving averages. I can tell you right off the bat, they're all gonna be in line. Nope, not compare. Not yet. I would compare this thing to Tesla, but maybe on another video if you guys want it. Let's see, we want just regular moving averages. I'm going to put up 3 of them because I like to look at the 10-day. We're going to look at a 10, which is essentially 2 weeks of trading data. We're going to look at a 20, which is essentially 1 month. And then we're going to look at a 3-month one, 60-day chart or 60-day average as well. And if you take a look at this, you can see it did have a little bit of a crossover here, but pulled on back. And at the moment, all 3 graphs, the short term, 10-day, the medium term, 1 month, and then 3-month, are all in line. So that points to this stock going higher. Moving averages are probably they're the easiest of the indicators, but they're also one of the easiest to get kind of tricked on too, because you will have these crossovers. And look how late this crossover came relative to when the down move. The down move happened on the 24th of November, and we didn't get the crossover in between the two the short and the midterm moving averages for another almost 2 weeks of trading data. So you can lose a lot of money in that time frame. So that's one of the things. It's a lagging indicator, but that being said, it can still give you a quick snapshot of how things are going. And just for fun, let's change the time frame up here to maybe a 1-hour chart just to get a better sense. I'm gonna have to spread this pricing on out, pull the chart lower, spread it out just to get a better sense of. This is now, instead of looking at daily bars, we are looking at hourly bars, and we can see, actually that may have been a little too much because this is, no, it's okay. So yeah, you can see how things have crossed over on this time horizon. You certainly don't have a clear picture of a stock going higher. In fact, in this scenario, you have you almost as soon as this 60-hour, now so this is an hour chart now, as soon as this 60-hour this yellow line crosses, actually all 3 of the short term, or all 3 moving averages for this shorter time frame, are going to be pointed lower. So just a little something to keep in check. I do like to take a look at more than just one time frame. You can see on the 15-minute chart, and markets are closed right now, but on the 15-minute chart, you can see things are definitely heading lower. So maybe that's an indication that stock's going to go lower today. But let's move it back out to the 1-day time horizon. Gonna shrink this back in there so you can see some more data. It's one of the things I like about this program, TradingView, is it really gives you a lot of ability to manipulate the calendar days that are seen on the bottom, as well as the amount of price data the number of prices that you're seeing on the chart. So let's get rid of these moving averages. Next up, we're going to take a look at the MACD, and then after that, we'll definitely start diving into trend lines and retracement levels. So I do like looking at MACD just to get a sense of where strength is, and also to get a better sense of how it's gone in the past. So in this scenario, let me pull a little more price data in. Got the 1 day. All right. There we go. Okay. So you've had some smaller crossover patterns in the past, and then you had this one large move really back from the 14th of October. It didn't cross over until the 30th of November, which was the second consecutive, but one of the third lower days that this company saw, this price data saw. Then you had a fall in price, but it did start to pull back up. So I like just looking at the MACD because it gives me, again, a snapshot of, in general, does this market look overbought, oversold? And if it's oversold, is it time to buy? And if it's over, so I would tend to buy on a crossover like here. And then if it's oversold, you would look to sell on a crossover up there. So right now, it looks like we're about to be into the sold or the overbought category, and likely a time to get short the stock. But we'll see. I mean, this stock has had a really nice run over the last few months, so definitely don't want to get in too soon. Let's take a look at the hourly data just to get a better sense. So the hourly has already crossed over. And what's interesting here is that in the hourly, we actually had it where we did come below what's called the zero line. So we look for crosses above or below the zero line. So this crossover below the zero line would be a good indication to buy. If you had bought that, the high of the day was $58. You would have tried to sell it sometime around here, 59 and change. So you probably would have made $1.50 in that if you waited for the crossover to signal a time to place the trade. So that's it. Let's go back to the 1 day data. I normally do like to look at the Fibonacci retracement in this scenario with the stock having moved all in one direction. It really isn't as relevant, but we can try and analyze previous moves just to get a sense of what a pullback might look like and how much to expect. So I'm going to start down here from May, and I'm going to go up to this first section because this was the only place that we really saw a pullback. So the pullback here got us just above the 38.2% range before stock went ahead and ran higher again. And I'm curious on if we were to look at same thing just from this low all the way to this top right here. We've already, let me see if I can expand that for you guys. In this little move higher, we've already had a little bit of more than a 38.2% retracement of that move. So really, you know, I don't know if you like Elliott wave or if you like Fibonacci retracement. There are a lot of different ways to skin a cat here. The main thing is that you have a means of saying, okay, this pullback might actually just be the continuation of a larger uptrend. So last thing that you want to do, and trust me, having had a career in trading, I certainly have done it. It's when you believe that a trend has stopped and that the market has moved in another direction, and it turns out that what it in fact has done is just had a slight pullback, sort of like an Elliott wave moving from the B wave to the C wave or something like that. And you end up getting run over by the previous trend. Nothing will make you feel less smart than doing that. So let's look at what I'm curious. What I like doing, I love pulling up channels just to get a sense where things are, where they could end up going. So we really haven't broken out of, in this stock particularly, we really haven't broken out of a major, of course I just drew this channel, but this channel is still, it applies to the previous two. So let's do this. We're going to draw another one. How about that one? Still looks like this stock is going higher, even though we're experiencing a pullback. The challenge here, of course, is that stock right now is trading around, closed yesterday was $57.15. That's this red mark here. It's lower in the pre-market, but you know, if you wait until, what level would that be? Almost $53, for this stock to fall, you're talking about letting the stock fall $4. So that's roughly 8% on this stock. You would let it fall before it goes higher again, and before it goes higher. I'm not big, or before we are serious about this being a short. I think this is just a pullback, and I fully would expect this stock to head higher. Sure, it can come back and test this channel. It can test. I mean, this channel is one that I drew. It has no other relevance other than it fit visually right now. So when you're using technical analysis, definitely use it from that standpoint. The markets can do anything. We're just trying to draw lines, get a visual, or use statistics to better understand what it has done. It doesn't mean that it has to do it again in the future, but I fully expect this stock to head higher. Sure, it may pull back to $53, which would be $4 lower from here, but it could just go ahead and decide to rip higher as well. So I'm gonna start looking at probably some option trades that I can put on in this company right now, and that would end up most likely being buying calls or call spreads and looking to sell some puts or put spreads. But I you know, the part of me would like to wait and see if we're gonna get a full pullback. So that's it for NIO. Hope you guys are having a great day. Happy week, and I'm so glad that you're listening. As usual, happy trading.